Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market failed to hold 34 to 36, which led to a test of the 28 to 30 zone where responsive buyers have been active. And since then, the market has been balancing in a narrow range. Our short-term bias heading into the open is going to continue to be neutral as long as the buyers can hold ES above the 28 to 30 zone, which marks the initial support. And we're also going to use that area as the bull-bear zone, since it marks the bottom edge of the range over the last 4 to 5 days. So as long as buyers can hold it above 28 to 30, there's still a chance that we can move higher into the 40.5 to 42.5 initial resistance zone and possibly even higher into 45.5, yesterday's high of 47.5, and then the resistance at the all-time highs at 49.5 to 51.5. So our short-term bias is going to be neutral, but in the event that the market puts in a directional break below 28 to 30, and as long as that break is happening on broad market weakness and some sustained downside momentum with the other markets also selling off, then the bias is no longer going to be neutral. So if we get a breakdown below 28 to 30, then the short-term bias would flip to bearish, and from there ES could liquidate down into the 20 quarter and the 16 quarter to 1875 support, which is still an area where responsive buyers can be active on first test. And in the event of some even more aggressive selling, buyers can still be active at 12.5 and especially 08 quarter to 11 quarter. On the upside, we're going to see how the market responds to the 35 to 36 area. We have a important high volume node at 35.5. We have the gap at 36. And if we can see a breakout above 35.5 to 36, that would at least tell us that the market is still fairly stable. It's still in a fairly balanced state. And from there, ES can then test 40.5 to 42.5. Now, 40.5 to 42.5 is not necessarily an area to short the market. That is something that we're going to have to assess in real time. So if we're seeing strong directionality to the upside, and let's say the market's moving higher on broad market strength and some sustained upside momentum, then we might only get a small reaction at 40.5 to 42.5, and from there ES could go higher into 45.5 and then test yesterday's high at 47.5 and potentially even 49.5 to 51.5, and that's a zone where responsive sellers can be active on first test. So given that the market is still in a very balanced state, we are still technically trading within a very defined range, and our short-term bias is neutral, we are going to have to assess the situation in real time. See how the advanced decline line is developing, look at how the momentum situation develops by watching the NYC tick, look at the distribution of the tick. Is it holding above zero and printing some decent upside values, or is it holding below zero and printing a lot of negative values? If there is sustained momentum to the upside, then we're going to have to exercise caution at the 40.5 to 42.5 zone, but we might still take a short setup around 47.5 or 49.5 to 51.5, again depending on how the market approaches it. And then on the downside, 28 to 30 could provide a long setup, but we still have to assess the situation in real time. If the market is going down on a lot of downside momentum and we're seeing a lot of broad market weakness with a very bearish advanced decline line that is rapidly getting weaker, then the market could put in a breakdown below 28 to 30, and if that happens, then we're going to want to be cautious on the long side at least until 16 quarter to 1875, and that could even provide us with an opportunity to take a short targeting a move down into 20 quarter and 16 quarter to 1875. So right now, again, the market is in a very balanced state. Our short-term bias is neutral, and when you're dealing with that kind of market, you want to be very selective with the trades you take, and you especially want to be extra careful initiating trades in the middle of the range, because right now the balance that we're dealing with is roughly 28 all the way up towards 47.5 and 49.5 to 51.5. So initiating a trade in the middle of the range is only going to make sense when we are seeing strong signs of directional conviction in real time. absent any clear-cut and strong signals of directionality via the advanced decline, the NYC tick, or the other markets, you're going to be better off being selective, waiting for good trade location, and if that means missing a short-term move, that's still okay. The goal is not to capture every possible move in the market. The idea is to take advantage of situations and trade ideas that provide high reward to risk and some decent probabilities in our favor. So those are the main thoughts heading into the open. Let's see how ES responds to the 35 to 36 area and 28 to 30. That'll help us establish our intraday bias, and we'll take it from there.